China's 14th National People's Congress ends on Monday, the 13th of March, after an unusually short 8-day span. And so far, financial markets are looking at what they view as a disappointing target of 5% GDP growth for China in 2023, as well as a newfound emphasis on environmental, social, and governance or ESG issues, and a focus on both home-developed technology and financial stability. That GDP growth target is a surprise to some observers, coming after the COVID and lockdown affected 2022, and how that sets a low base. So the latest monthly growth numbers for retail sales, industrial output, and fixed asset investment in China on Wednesday the 15th could be an interesting test for the world's second largest economy. If it sputters, so could global growth. If China booms, one concern on the other hand could be that could further stoke inflation. Now these numbers will cover February, and note that the New Year holiday to welcome the Year of the Rabbit only ended on the 5th of that month, so the celebrations could have had some impact on the numbers. Back in January, which also saw a week of New Year celebrations, retail sales fell 1.8% year on year, the second straight drop. Industrial production rose 1.3%, the slowest rate of advance since June 2022, and fixed asset investment grew by 5.1%, adding to a trend of deceleration here that dates back to the fiscal stimulus of early 2021. Back home, on the corporate front, just 4 FTSE 100 firms are scheduled to release results or a trading update, but there's a long list of mid and small caps that are due to update their shareholders. Names which may be worthy of further note and research include the following, in what's a very busy week for insurance specialists in particular, although some of these dates could still be subject to change. Phoenix Group and Direct Line on Monday the 13th, Pennon, Close Brothers, Costain, Harworth and Sabre Insurance on the 14th, Balfour Beatty, Ferrexpo and Marshalls on the 15th, Rentokil Initial, Halma, OSB, DFS Furniture, TI Fluid Systems and Centamin on the 16th, and EMIS on Friday the 17th of March. But the company which could just cause the biggest fuss in the week ahead is life insurer Prudential. The FTSE 100 member is set to publish its full year results for the 12 months to December 2022 on Wednesday, the 15th of March. Prudential shares are up by almost a quarter over the past year, helped by a terrific run since November, itself the result of the end of lockdowns in China and Hong Kong, as well as more buoyant financial markets in Asia and indeed worldwide. After the spin-offs of London-headquartered fund manager M&G in 2019, a major fundraising in Hong Kong in 2021, and the demerger of Americans Jackson Life in 2022, Prudential is now a player on demand for financial services in Asia and Africa. The firm's a leader in savings and health and protection products and has a strong distribution network for bank assurance as well, whereby banks sell insurance products. Prudential's long-term strategy is to position itself for both population growth and also increased prosperity in the rise of the middle class in Asia and Africa, as it is potentially the sweet spot for increased demand for financial products and services. Note that in 2021, Hong Kong was Prudential's most profitable market, followed by Singapore, Indonesia, and mainland China, while the firm has identified India, Vietnam, and the Philippines as what it calls high-growth markets. Now, Prudential has 3 long-term financial goals, and these full-year results, the first set to be unveiled by new Chief Executive Anil Wadhwani after his arrival in late February, will be viewed in light of these targets, which are new business profit growth, or NBP, to exceed GDP growth in its key markets, sustained cash flow and capital generation, and also double-digit growth in embedded value, or EV per share, EV being the present value of future profits plus adjusted net asset value. Note that Prudential ended 2021 with total EV of $47.4 billion US dollars, equivalent of just under $17 US dollars a share, excluding goodwill. Yes, insurance companies do take some understanding, and Prudential is particularly difficult owing to the changes in group structure since 2019. However, there are 4 metrics by which Prudential's results will be judged by analysts and shareholders. The first is APE, or annual premium equivalent. This is the sum of the initial premium on new annual premium policy sales plus 1/10 of premiums on new single premium policies. This is a measure of new business written, and in 2021, Prudential's APE figure was $4.2 billion, while the first half of 2022 showed a 9% increase on a constant currency basis and a 6% increase using actual exchange rates. The second metric is NBP, again on new business profit. On an ongoing operations basis, this was $2.5 billion in 2021. In the first half of 2022, it fell 5% to $1 billion on a constant currency basis and by 7% on a reported basis, owing to the impact of higher interest rates and changes in geographic mix. The third is operating profit as recognised under the statutory IFRS accounting regime. On an adjusted basis, the benchmark here is the $3.2 billion earned in 2021, and Prudential recorded an increase of 8% and 6% on a constant and actual currency basis in the first half of 2022. The final key yardstick, a bit simpler this one, is the dividend, where Prudential has declared its distributions in dollars since its full year results for 2019 after the M&G spin-off, which reduced the standalone payout from the parent. In 2021, Prudential paid out 17.23 US cents a share. In the first half of 2022, the board and then interim boss Mark Fitzpatrick sanctioned a 7% increase in the interim distribution to 5.74 US cents a share. Note the final chart shows the dividend in pence all the way through for ease of comparison. I hope that you and your families are all in good health and good spirits. Thank you for watching, and I look forward to talking to you again next week.